you need to put your own money, like $100, something like that. But with your own money, it's such a huge difference to trade. So when your own money is on the line, yeah, everything with psychology is getting in. You're €1 in profit, and you're like, okay, €1, that's nice money. But it's so hard to let the trade run. It's so hard. I can't describe it, how hard it is. When you sit there and risking €5, it could be with €5, but €5 is hard to risk at the beginning.
Just a quick pause before we get into this. Trading can be intense, and staying mindful during your session matters so much. That's why I created and am sharing a free 3-part audio experience that's helped me deeply. 1 for starting your day with calm intention, 1 to stay centered while you trade, and 1 to wind down with grace when it's time to stop. These tracks are yours. Just click the link in the description. Hey, welcome back. Here at the Market Mamas podcast, I cover a wide range of topics from the intricacies of day trading to mindset mastery and psychological growth, with the goal of the conversations being next level growth for all of us. My name is Becky, and I'm a US-based futures day trader from the Pacific Northwest. My trading experience includes trading stocks, options, crypto, and futures, with both trading a personal account as well as with prop funding companies. Over time, I found that I most enjoy the fast-paced world of intraday futures trading, so that is my primary day trading focus now. Thank you for joining me on the Market Mamas podcast today. Hey, so Becky from Market Mamas here, and my guest today is actually from Germany, which is so cool because I really enjoy talking to traders from all over the world, definitely. And, the way that this came about is that he's doing some work with studying technical analysis, and we thought maybe we could compare notes on how we trade. And so I'm going to actually let my guest Tim here hit me with some questions, and we'll talk about different strategies for seeing the market and executing trades. So this is going to be a pretty cool technical episode for you guys. So hang in there. It's going to be great. Thanks for being with me, Tim.
Hello, my name's Tim. I'm from Germany. I'm 24 years old, and this interview is for my master thesis. So it's my last test in my studies. So I'm really happy to be here.
Do you trade the New York session, Tim? Because I do, and that's 6:30 in the morning for me, but that would be like lovely afternoon time for you if that's what you trade. When do you trade?
I trade London and New York as well. So for me, it's really easy. 7 o'clock is London, so not the opening of everything, but the beginning of London session is for me 7 o'clock. It's easy, and then New York is 3:30, something like that, depending on it's summer or winter time. And yeah, that's no problem for me. So it's easy to work with that time. And yeah, I can't trade Tokyo, but yeah, that's no problem.
I mean, you don't want to trade them all.
No, I'm not a fan of Tokyo, so that's fine.
Yeah, same. And you've been trading? I've been trading since 2021. How about, is you the same, right? Similar?
2022.
Okay.
Yeah, beginning of 2022, in the end of 2021. But yeah, tried out everything with indicators to basic technical analysis, and then losing some money, winning some money. That's all part of the game. I would say that I'm profitable now for half a year to 1 year. So yeah, it's like with 2 or 3 strategies. I'm not a fan of scalping, so I'm more like day trading, analyzing in the H1 or H4 and the daily, and then getting my entries in the M5, M15, or M30. So depending on what I need to do at the day. So when I have no time, then it's entering M15 or M30. And when I have time at the PC, so it's like M5 or something like that. So depending on what I need to do for the day. So, but my strategy is more like trend direction. So I'm a huge fan of the Fibonacci retracement and overall support and resistance, and the trend is your friend. For consolidation, it's a little bit harder to find your perfect entries. I'm I would say I'm like German precision. It's I'm really precise with my entries. So it's more like I'm a diva. So I want the entry to be 90% what I want. So not 100%, that's not coming, but yeah, I'm more of a guy that say, okay, then I don't take the trade, then taking the trades and with an unclean setup. So it's like only A+ setups.
That is a
Sometimes with
superpower.
Yes, sometimes with a demo account, I'm trying new strategies. So then it would be a B or a B+ setup, but that's something different. In my normal strategy is like, I would say 1 or 2 setups per week. So in 5 pairs of Forex. So yeah.
Yeah.
Someone would say, oh, that's not that much, but for me, it's easy to trade with some scaling strategies. You have more entries, yeah, as well, but then I need to trade gold, and gold is sometimes, I would say, a little bitch. Yeah, and yeah, I'm a huge fan of Forex, so
Okay.
yeah, I love to trade GU, GJ, and USD, some major pairs, nothing fancy or UJ. So yeah, that's it.
Nice. I love that you have, put in the time and studied and you really are so precise on your entries, because that really is kind of a superpower in terms of the traders that make it into profitability and can sustain it, because they're not so haphazard and they don't give in to every trading whim, but instead they're like, I have back tested this strategy and this is what it looks like when I really feel good about it. And so that's the only ones that I really want. I mean, that's growth and maturity as a trader, is recognizing that if you're lukewarm on it and ends up being a crappy loss, then clearly don't trade the lukewarm setups. Like, wait for all of your confluences and your best set situation, and then, fire away at it, because that's how I think we progress to consistent profitability, is being able to dial those in and lock in almost all the time.
Yeah, and lock into your strategy. So when you have a good strategy, it doesn't need to be perfect. So there is no perfect strategy, but it needs to be a good and a profitable strategy, and you need to learn it and stick to it. Don't try to make it like, okay, now I trade fair value gaps, and then the next day some support and resistance, and then the other day some Fibonacci retracement, and then, oh yeah, ICT is another thing, and stick to your strategy and try to precise it, optimize it with your own style. So I have another style than my mentor, so that's for sure. But in the end, when you put it down to the fundament, it's always the same. So and I think that's so I would say the fundamentals of technical analysis needs to be all strategies are the same on the fundamental of technical analysis. Yeah, I know fundamental analysis, but yeah, in the end, I don't use some special things. It's like support and resistance, break, retest, entry with candlestick pattern. So my first rule is no retest, no entry. So
You don't
that's
chase the
my
momentum.
yeah. So some people use breakout trading. That's fine. I'm the guy that want this retest. The retest is my main thing that I want to see.
Wave two.
What did you say?
Wave two, Fibonacci.
Yeah. And for me, it's like with support and resistance as well. So when we break a support or a resistance, come back, and then it's like there's some liquidity there, and then it's got squeezed out. And then when I see, okay, the whole market is gonna go this way, this is the retest. So, and when it's clean, I really like it. So, and then you can say my win rate is improving with the retest, I would say 10 to 15%. So, and I think that's really good. But yeah, so for me, it's no retest, no entry. Yeah, that's
That's a
one of
great
my
rule.
main takeaways when it comes to technical analysis.
Thank you for sharing that. That's a powerful system that you have refined. What I love is that you're not a strategy hopper. You don't want it to be more complicated. You don't want to search for more stuff to add. You want to like refine what you have seen work and then make it even better. Make it so your eyes can spot it as soon as possible and know what it's looking like when it's laying up. That way you can have higher confidence in it. That's powerful.
And it's always like free confirmations. So for me, it's the trend. So yeah, we break above a high, so or a higher high, a lower low, something like that. Or we create the lower high or the higher low at the Fibonacci retracement. And then, so trend is number one. Then the retest. So it's like the retest is accepting support and resistance at a certain point, and the candlestick pattern as well in this retest. And sometimes I use some RSI or stochastic, something like that. So when it's overbought, underbought, and then I know, okay, there's a little bit of room in there or not, but I'm not, okay, only with, because of this, I'm entering the trade or not. So it's more a support unit. And then, yeah, my rules are written down here on my table. So, yeah, it's like, then you have your three confirmations, and then I only enter the trade. So when it's not clean, when it's broken with two candles under it or something like that, I'm really picky with that. So my mentor is always like, hey, that looks good, but not perfect. And I'm like, no, I don't want to see it. Get away with it.
Strong risk management.
Yeah, but it's not easy.
No. It
Yeah.
takes a long time to really dial into why you have to have the risk management after you've suffered losses. That's a skill you have to learn with time as well.
Oh, yeah. So everyone that says, okay, after 1 month, I'm profitable with risk management and everything, I would say you need half a year to 1 year with pure, I would say 1 or 2 hours a day is really good. Don't overload it. So with overloading, it's not that good. But 1 or 2 hours a day, and then you can be profitable after 1 or 1.5 years. So with a clean strategy and not testing so much. It's like, I wouldn't say being stupid, but yeah, that's your strategy. Do it. I was the one that say, okay, I want to test this, and this. But in the end, when you have a good strategy from your mentor, use it. Nothing more or less. Use it. And in the end, when he is profitable, you can be profitable as well.
Yeah.
Everyone has the same charts.
Yeah, I think that we all just have to, honestly, I think you have to lose your way into like prioritizing risk management. At least I did. Like I had to have the hard losses and be like, I would rather have not taken that much of a risk. How could I have done better with that? Where could I have snugged it, or where could I have fine-tuned my entry in order to not have taken that big of a hit? And so just every time you are in a trade and you feel it out, win or loss, you start to think about how you could have done it better. And for me, that has been the biggest teacher, is just time and executions.
Yep. And backtest is good, but trading on the live market is so important. With
There's
a
no
demo account,
replacement for it.
that's good. With a demo account at the beginning, but you need to put your own money, like $100, something like that. But with your own money, it's such a huge difference to trade. So when your own money is on the line, yeah, everything with psychology is getting in. You're €1 in profit, and you're like, okay, €1, that's nice money, nice money. I don't say that I wasn't that guy, but you need to stay calm. For me personally, I'm like, when I enter a trade, I close TradingView with this chart on it and MetaTrader, and I'm like, okay, let it be. I don't want to see it. Get away from the chart. And I have my alerts when there's a certain area, and then I'm looking again on the charts, and then putting my stop loss on break even, something like that, or trailing it to a new higher low or lower high or something like that. But it's so hard to let the trade run. It's so hard. I can't describe it, how hard it is. When you sit there and risking €5. It could be with €5, but €5 is hard to risk at the beginning.
And when you notice, if you watching your P&L during a trade is really not helpful, because you can watch it go into profit and you're like, oh, I just made this much money. And then it starts to retest and you're like, frick, like come back.
Yeah.
And then that's when the emotions, like as soon as you put on a live trade with your money, your account's behind it, automatically your heart rate does a jump and beat, and you start to feel invested. Your psychology starts to waver, like greed, fear, FOMO, all that stuff. You have to be able to tamp it down and focus on your system, your levels, why you got in, what it looks like, what supports your trade, what doesn't, what your risk is, which was predefined based on your system ideally, and then trust it, which is why, I love that you said it and you literally close the screens, because then you can't monkey with it. Then you can't deepen your stop and you can't try and lock out profits sooner because you got nervous. Like,
when you have your watch list on, then you see, I know, okay, this percentage is good for my trade, this percentage is not good for my trade. And then I'm like, okay, I need to close everything from TradingView because I always see the numbers right there and I know my entry point and something like that. And then it's like, okay, close everything. That's really, really helpful. What would you say are the greatest strengths and weaknesses of technical analysis?
Okay, so I think the greatest strength is that there's so much data that we have used in order to create the reads that we can take on the market. Like the stock market's been around for hundreds of years. And so over that time, there has been predictable patterns that we have been able to see, study, backtest, trade, and then recognize when they repeat and what they look like and how retests happen and what they will often look like and how extended a market will get before generally we become overdue for a pullback. And so I think that just the sheer history of information that has created technical analysis is like very, very powerful. And I lean much more heavily into technical analysis than fundamental for that fact that there is so much rational information behind it. You know, my first career is in nursing and I'm still a part-time nurse. And same thing there, right? Everything that we have learned from science and healthcare over the years has made us exponentially better at caring for people and diseases. And I think the same can be true for trading. Everything that we have learned over years and years and years is repeatable and understandable. And so I love that about technical analysis is that, you know, you can really drill into any aspect of it, you know, support and resistance and trend following, value area trading, and really see where it came from, what it looks like, and how it has, what it will tell you when it does certain things. And so I think that technical analysis is the superpower of trading, and definitely my trading. But it's not perfect. I mean, you know, the downside is that it can all go out the window. Like the market is a moving beast and it can do whatever the hell it wants. And so that's why essentially you have to have a stop loss, because you can have a system that is nearly flawless and it will fail somewhere. You know, something will happen. There will be a random tweet or whatever that will just knock it way the hell out the other left side of the park. And so, you know, it's not flawless. And so you always have to make sure you're managing your risk, because even if your most absolute perfect A+ setup, it could fail. And you have to be able to respect that risk. And so technical analysis is good for a lot, but it's not foolproof. So
it's like you need to handle some fundamentals as well. Like today's CPI news, I wouldn't take a trade 1 minute before CPI news. So that's not part of my strategy. And then you
yeah.
need to know, okay, it's 15:30 for my time. So, and then, okay, don't open the trade. Or like, okay, CPI is today, and the market is a little bit slower because everyone is waiting what's happening. Because with Trump and Powell, I would say that they are no friends. And yeah, Trump wanna decrease the rates. Powell is like, no, the inflation is too high. So CPI is a really, really huge news for the market. So when it's really low, Powell can say, okay, now we can decrease everything. But yeah, it's such
Yeah.
a high news.
Yeah, I definitely, as part of my practice, to look at the Forex factory the night before when I prepare my charts, and then the morning of to refresh my memory. And it's a part of my written plan before every trading session of, is there any anticipated news? And same, you have to be very cognizant of whether or not you have a trade open when red folder news hits. And then also just the random incidences of things being said in a public way, you know, those ones you can't anticipate and you just have to manage your risk for. But definitely being cognizant of that for sure. It's a great point.
What pairs do you trade, or what do you trade? Stocks, Forex, or indices? What's your main focus on?
I actually trade futures. So
Oh, okay.
I have never once executed a Forex trade, which I'm starting to meet more Forex traders. And now I'm like, damn, I got to start studying. But I trade futures, US based futures for me. And so right now I'm trading the YM, the Dow Jones Industrial Average futures predominantly, but I also have traded ES significantly, NQ a little bit. And then I'll trade options in SPY mostly, because oftentimes the S&P 500 and the Dow Jones will move very similarly. And so I'll track both consistently. And so those are my main two, is futures and options, ETF options. But I definitely have a curiosity for Forex. And I have traded crypto. Was a big focus when I first started learning. And so I'm still holding some crypto as well. But I don't actively trade that. I just let it rock. But futures is my favorite. And I think the leverage is similar to Forex. Definitely they're not the same, but similar P&L outcomes, I think.
Yeah, I would say that you can use technical analysis on every chart. So there are some pair focus differences. So it's like GJ is moving more in Europe, something like that. So and gold is moving in Europe and New York as well. So it's like so there's always a little difference, and every pair
Nuances.
has an own character. So it's not like every pair is the same. So some pairs are more over like getting wicks or closing. So every pair has an own character. But that's really nice. So when you know your pairs, it's more like, I know, GJ, you are doing this. So no problem for me. I'm confident. But overall, technical analysis you can use on every chart. So if it's gold, Dow Jones, Nasdaq, or some Euro USD, it's always
You still
working.
just read the chart. And then
Yeah.
whatever you focus on learning the most, you do learn the nuances within that instrument. Because the same
Yep.
thing, I mean, ES and YM trade very similarly most days, but they are nuanced in slightly different ways. And so right now I'm just so locked into the movements of the Dow Jones that's where I find my best trading setups. But, oftentimes my trades could be on a larger time frame copied to all the indices because there's so many similarities, but they're different. Yeah.
Do you use the DXY as well for so looking at it or not?
Mm-mm.
Okay.
DXY.
Yeah, it's like what is the dollar worth?
Oh, like kind of like an index that gives you like an understanding of like the bigger view of it.
Is the dollar strong or not? So
Mm.
okay.
Because I don't trade Forex, so
Yeah, it's like for me it's something. Okay, yeah, I have it in my on my watch list, but it's like, okay, yeah, the dollar is not that strong anymore because so for the euro as well. So it's like for me is buying things from the US, it's really cheap, not with taxes on it, but yeah.
yeah, nice.
Do you use some indicators like an EMA or something like that?
Yeah. I used to use EMAs more. I got away from them when I got into the VWAP bands. So I love the VWAP bands, I'm not gonna lie. So I always have the VWAP and then 2 standard deviations on my charts as well. Because I feel like trading from the outside in, typically, stereotypically, historically, the market is rotational 70% of the days, right? And so, trading from the outsides in, mean reversion is a setup that I really enjoy. But the bands, the VWAP bands are really standard deviation bands, have been very helpful for me for that. As well as the only other indicator I keep on my chart is my stochastic, actually. And then that one I have to tune out for a lot of the time, but if I'm looking at the extreme of potential price movement, sometimes I'll get divergences there that can really be just an added confluence. And so with indicators, in the beginning, I dabbled with so many, and I think I realized that they were lagging at lagging information because they're based on the price action is what they create, what they show you. And so I definitely have leaned more into, naked charts at times and price action and candle patterns and a bigger market context read. And then I will use those indicators to further add confluence to a trade setup that I see coming. But I definitely don't lean to them as my entry criteria at all. They're extras.
So as you said, adding confluence to your setup. So it's
Yeah.
more like, okay, yeah, nice that it's overbought, underbought, something like that, or we are near underbought, near overbought. So that's good. But so the basic technical analysis is your fundament of your setup.
Absolutely. Yeah. Where the price is moving and what it looks like. Is it trending or is it consolidating? Is there momentum or is momentum dying off? Did we push against a significant larger time frame resistance and now we're getting clear sellers as evidenced by wicks and candle patterns up there? So that definitely leads my trading setups almost exclusively. And then there are bits of information that add confluence to it. And I absolutely am the same with confluences. If I can get like 4 or 5, I'm like, let's go.
Yeah.
Yeah.
So I really love to hear some confluence trading. I don't know if you know Q Banks.
Yes.
Yeah, and
In the YouTube world.
yeah, he's a small trader. Yeah, no. I learned from him. So
He's the
yeah,
boss. I've seen some content for sure. I mean, I think we should be friends and we're not yet. So, down the line.
yeah. For me, it's like so. His rule with no retest, no entry is from him, and it burned in my head like I'm dreaming about no retest, no entry. So yeah,
Nice.
the old Confluence videos from 2016 or 17. It's so nice to
Powerful.
so nice to see them. Can you describe your own strategy? So overall, you don't need to go in detail, but is it trend following? Is it what do you do on the chart?
Sure. Actually, it's both, right? And so I think early identification of the setup the day that we are potentially trading is so key for me. So I will consider market context significantly coming into the day. What has the market been doing, the daily and the 4-hour charts? Are we pushing this direction? Are we consolidating for days? Is there momentum building in a certain wave? And so I will come into each session as I prepare to trade with a market bias based on recent significant pivots. And then I will look at value areas. So I trade volume value areas from the previous days. And then that will give me information on if we're migrating up or if we're holding, if we're breaking out of value areas and potentially seeking value in another direction. Then that could give me an indication that we're having a trending day. However, if we're holding in consolidation and we can't even get out of the value area high for a couple of days, then that tells me that resistance is holding and potentially we need to go lower to find more buyers. And so I do market context on the bigger direction and then value areas in terms of what type of day we're setting up. Are we opening within value or pushing out of it? And then in that situation, I look at the smaller time frames, 4-hour, hourly, 15, to figure out if we're getting a certain setup for a certain direction and what the momentum is. And then I will have a hypothesis about if we're going to have a rotational day or if potentially we're going to have a breakout trending day and what each of those scenarios would look like. What level needs to hold or be broken in order to validate each hypothesis. And so at market open, which for me is 6:30 a.m. Pacific for New York session, I will wait for the first 2 5-minute candles. I won't take a trade any longer. I used to trade right open, but now I'll wait for the first 10 minutes, which is 2 5-minute candles, to start giving me the general momentum and then how much energy there is and where are we pushing to, what extreme, what higher level value are we pushing to. And then I would say it needs to hit a level and show me, is that breaking or is it holding? And that will be sort of, I will have made my pre-market hypothesis for what day I think might happen. And then when that information presents, it will start to send me in a certain direction in terms of what trade I see coming. And so then I just based off of my levels. If the level holds, sometimes I will get in on a candle pattern such as a morning star on a key support that looks like it's having the volume of turning back in. But sometimes if I'm not sure and I want more confluences, maybe I didn't have enough with, a value area level, a high level, a candle pattern volume, then I will wait for the break that will break some structure, at least on the 5-minute chart, back inward and then come back for the retest. And
Yeah.
then you often get some divergence there. You'll get a candle pattern that will hold above. Oftentimes if there's a break in, it can give you a fair value gap on the 5-minute. And then the retest of that is the retest of the support down there. Mostly I'm explaining with a bullish scenario. But then that will give me more added confluence because we have broken some structure back in and take it up. And so it's sort of like, it's evolved over time and there's a lot of layers to it, but it's basically just a broader view of what the market is, where the energy is heading. Are we trading tight and we're going to bounce around and fill in this area? Or does it look like there's really starting to break momentum? And if those things are happening, I need to see my levels either break or hold. And then at the break or hold at the key levels, am I getting volume? Am I getting turns? Am I getting wicks? Am I getting a stretched 2 band on my VWAP bands? And then that would give me this confirmation. And so there's, it's could sound complicated, but for me, it's actually simplifying the
Yeah.
more I experience it, you can almost like, I talk about the market like she's a lady, right? You can like learn her moves and you want to dance with her. You don't want to fight her. Like it's terrible if you're if you're fighting and scalping. But if you can just see that she's like breaking in and coming back and holding, then you want to get in on that next big push, which with Fibonacci's, wave 3, hell yes, like I want that all day, from a 2 band to a 2 band potentially. And so it's just experience and then time. And I think market context kind of runs the overall structure of my trade plan and having a good understanding for what the day might be setting up as. And then if it's setting up that way, what will validate that for me in real time so I can get in?
Yeah. So in conclusion, it's like you do a higher time frame analysis.
Mhm.
First of all, yeah. So daily, H4, and these are your, I would say, your bias time frames. So
Yes.
what's happening there, what is the important zone there, or the important support and resistance right there, and then what's happening in the M5. So first of all, you don't take a trade if you're not in an area of interest. So
Yes.
it's like you're going to your support or to your resistance, and it's going with the trend direction as well, so with the overall market bias, and then going in for the M5 or M15, and then waiting for a broke of a structure, and then the retest in a fair value gap or something like that.
Hmm. Correct.
Okay, perfect. Yeah, for me, it's like it's very similar. So I'm a huge fan of wick areas, and then with that support and resistance. So I'm drawing my zone at support and resistance, and then getting in some wicks when they are very much wicks. So it's like for me, there's exhaustion in the market. So wick areas are always exhaustion. So then we turn down or turn up at that certain point. So for me, it's like, okay, that is an area of interest with my exhaustion area. And when we are in trend direction, it's Fibonacci retracement every level. So, and then on the lower time frame, test and retest. So that's really easy. And then it's so good to hear because the test and retest is always acceptance of support and resistance. And that's so nice. So yeah, you have I would say a low volume support or resistance because it's M5 or M15. But that's it's like what you do in the higher time frame, and then you convert it to your lower time frame for your entry. And yeah, so the strategies are very, very similar, I would say. And with the other traders that I talked, they have always the same with technical analysis. Everybody, I would say 95% say, okay, I use support and resistance and what the chart is doing right there. And then I got some colleagues from me, and they say, but how did you point out the important support and resistances? And I'm like, that's not that hard. I'm going in a higher time frame, and when it's building right there, and then I have an area where my H1 or H4 support and resistance should build up. And when I see a support and resistance in daily, and then I break it down to the H1, and it's in the same area, then I know, okay, so I have a confirmation from the higher time frame as well. So it's not only in H1 support and resistance, it's in H4 on daily support and resistance. And then in the end, you don't need to write down every support and resistance, because when I would start my H1, then I could draw down thousands of support and resistance because it's always a red and a green candle or a green and a red candle. And yeah, but you need to figure out what support and what resistance is crucial for market movement. I think, and that's a really hard thing to see.
I think that you have to try and find a good mentor who does it well, and then you just have to do it. You just have to draw them all the time, like draw levels on your chart, and then be curious instead of like count on them working, but be curious and be like, I wonder if this hourly will hold, or if it wants to push to this 4 hour that's down lower, and then let it play and let it get to that area of interest, like you said, and then see. And so for me, like at one point I dabbled with trying with limit orders at a significant area of interest, but then you're getting in without your confirmations. You're getting in without a candle pattern down there. And so I'm working on backing away from that and just letting it show me first if it's holding or not, because, it can play for a little while and then blow to the next one down. And so that's something you just have to draw them, feel them out, see what happens. And then every day is going to be a little bit different. And so sometimes having multiple levels drawn on your chart from different time frames, and then just being open to receive the information from the market, I think is so powerful, because then you're not biased in terms of like, I'm going to get in at this level because this level is going to hold. Well, that sort of certainty will get screwed every time, because she doesn't have to. The market can push to whichever level the money is, and you don't really know until you know. So
Yeah.
patience and curiosity, I think, are really powerful at waiting at let it get to your area of interest, use alerts so you're not like just in a trading trance, and then see what happens there before you put your money on the line.
Yeah, so I'm a huge fan of alerts. So it's like every morning I'm like, okay, this area is interesting, this area is interesting. If it's between these two areas, no trade for me, not interesting. So wait for my area of interest, and that's everything for me. So, and because of this, you can go cooking or something like that, and you don't need to stick to the charts, and that's a huge advantage of alerts or knowing what's going to happen in the market. So, or higher time frame analysis. So I'm not as I said, I'm not a fan of scalping, because you need to stick to the chart, and I love to go out or doing something different, and don't stick to the chart. I learned for the daily and weekly levels, so it's like going in the line chart, and then you always see the closing parts of it, and then put on your horizontal lines and place it between one support and one resistance, and then then you have your daily and weekly levels. So, but I do this every day. So every day I stand up and then delete my whole analysis and then do it again. So because then I have a fresh bias of the day. So sometimes it was like when my analysis was I did it on a weekend, and then I'm like, oh yeah, that's fine. And then I saw a trade later on at the day, and I was like, hey, why that was so clean? So why didn't I wrote it down? And then I'm like, okay, yeah, you need to do the analysis every day. So every morning I delete all my analysis and then do it again. And because of that, it's for me, it's you have a fresh bias on the market because you don't see anything. So then it's like, okay, clean look, and then it's easier. My personal opinion.
Yeah, I work ahead in some ways. Like, I would do my charts every night. I review what the market did, what areas were powerful for it, and then I'll mark them off. And I will, erase the levels that were from the previous day that were traded through today and maybe are kind of used up or weren't as big a factors as I thought maybe they were. Those get erased. And then I update every night. And then, I never just trade those in the morning. You have to wake up in the morning and be fresh. And then I do the same thing. Like, look at what happened overnight and then have fresh eyes and start from the bigger time frame back in again, and make sure your levels are where you want them and for the right reasons. That way, when you're ready to trade, all of that stuff is situated and fresh. I think that's great advice.
Do you use some candlestick patterns? So I heard Morningstar and something else like engulfing, or yeah, there are so many candlestick patterns. So
Yeah, I definitely spent some time and I learned them all, the tweezer tops and all the white soldiers and stuff. But predominantly I want to see the candle patterns that support continuation or reversal. And then I want to see what they look like at my levels. And so an engulfing at any point is a as a show of force. And so oftentimes I will really like an engulfing that can create a fair value gap on a 5 or 15-minute time frame when I am in my trading session, because I'm a day trader. And so those will be powerful for me in twofold, because not only are they an engulfing out of an area, but then they create a fair value gap that can present the location for a potential retest, especially if it trades into it and wicks out of it. And so that is a powerful pattern for me. And then the morning star and the evening star at potential extremes are also something that I look at, because I think wicks are a strong sign of aggression. And so if I'm going to get that aggressive counter energy at a key level, like that yells at me of like, this could be the potential turn, especially if that small body candle at the level with the big wick has high volume. That can signal to me that we're changing hands. And so then I want to see it just break back in, and I feel really good about that risk generally. So those are probably my most favorite and most utilized every day, is the doji, evening star, morning stars at potential pivot points, and then the engulfings with the anomalies that they create and what happens at them on the retest.
Yeah.
That being said, I mean, I have studied all of them and have notes on all of them, but those are my faves.
For me personally, I only use the engulfing at my retest. So then, as you said, so it's like you have a force push in one direction. You're eating the latest candle. So it's like, yeah, you have more volume in the candle in your direction. So,
Yeah.
and I think that's a really great thing. So yeah, you're trading, you have your strategy, win rates, something like that. And how do you handle some false signals? Because they're happening. So how do you handle them?
Handle, what is it for?
So when you have a false signal, and then what
Oh, false
do you
signal.
do? Yeah, a false signal.
Well, I get stopped out.
Yeah.
I think I tend, early in my trading career when I was inconsistent, I would take on more risk. I would want to trade the bigger context of like, I think we're going to go up today. And so I just want to get along and I want to hold it. And so then I would take bigger risks, and it would work enough of a time to feed that bad habit for a while. And so but when it wouldn't, and it would smash down far on me and I would take a big hit, obviously those are massive deterrents. And so now for me, I have to have a more clearly defined risk management system, because sometimes it absolutely will give you false signals, and it will, you'll think that this level is holding. It can give an engulfing and it can come back, and that can be potentially the opportunity to go in the direction of the engulfing. But the flip of that can be true, is that engulfing was the retest of the direction that the initial push was in. And so if you go down and you want to join this, it could just freaking sink through. And so
Yeah.
for me, I have to be very clear on what wick level is my risk and then stick to it. And sometimes it's a bitch, and it will wick you out and it will do what you thought. And you just have to eat that. You just have to be willing to take the hit, because it's better to take it when it's small based on that specific pattern at that exact location and take the hit, versus giving it more room. Sometimes it will work, sometimes it won't. But when it doesn't, the hit is much harder. And, like I said, experience taught me to learn the hard way that a small hit, you're still fully viable. Like if I take a small hit of one candle on one trade, then I can still remain calm and focused and open to receiving the data. Like, what did that stop out teach me? What did it show me about this level? Is it showing me that I'm wrong, or was it just a wick out and I need to wait for more confirmation and then I can get back in? And so I have learned that if I take the hit when it's small on a fake out, or just a wrong trade based on more data that presents, then I'm still patient enough to potentially recover the day, or even just call it a day and be like, I didn't feed that. I'm starting to get distracted. My time at the computer is done. I'm just going to let it lie. But I definitely think that respecting risk management has been something that I grew into as I matured as a trader, and fully respect now, because those big hits, it's not worth it to give back days worth of progress to just try and be right, when you know that if you take a small hit, you really can be fine.
Yeah. For me, it's like when I take a loss on a pair, then the pair's done for the day. So it's like, okay, this pair is has this
You didn't read it right.
direction not with my bias. So it's like, okay, put it away. No trade for day anymore.
Nice.
So yeah, but I have 4 pairs. So yeah, you have enough to cover up. But for me, it's like I have an trade manager in trade, not in TradingView, in MetaTrader. So it's like I always put in 0.5% and then replacing with my lot size and my stop loss, and it's calculating it. So I'm like always using 0.5% of my account, and then that's fine for me. So I don't need to figure out, okay, what lot sizes, and then, oh no, we are 2 pips more over it. And yeah, so it's always like, okay, put a lock on it and then 0.5. And when this engulfing on my setup is hidden, and then enter the trade, and then, yeah, as I said, close it and then go away.
Nice.
And
That's awesome. Way to use the automation to protect your accounts. That's very powerful.
yeah, so it's and then it has an automated trading stop loss, not the one from the MT5. It's a more I
Count
would say
protection.
refined trading stop loss. And then yeah, sometimes when I'm not on the chart anymore, then I say okay, in 10 pips to my stop loss, and then trailing it with 3 pips. So with 3 pips steps, and then I'm like, okay, yeah, you hit the stop loss, but it wasn't profit, so that's fine for me. But risk management is one huge thing to figure out at the beginning, so it will save your tons of money. And for me personally, I use my expert advisor, and yeah. But I know some people that have their plan, so it's like, okay, when I have an account that's 5,000 euros, I use lot size 1 or 2 or something like that. But I'm a huge fan of it's calculating with the money. So a GJ is not worth $1. So a pip is not worth $1. So it's 0.67 or something like that. So and then it's calculating it with the money amount. And for me, I don't need to calculate plus 30% on it to get my $1 with it. So it's like it's like being it's more comfortable for me.
Yeah.
But risk management is important. Everyone that needs to hear this, risk management, only risking 1 to 5% of your account. And when it's a play account with 500 euros on it, okay, then you can do 10%, but it's a play account.
Yeah.
That needs
Yeah.
to be
Take it
said.
seriously and take the hits, because doing the alternative will just hurt your soul, your heart, your energy, and it will set you back. It's not worth
Yeah.
it. Yeah.
Do you use some automated trading systems, something like bots from people or your own bots or something like that?
Nope.
Okay.
I am purely discretionary, which is how I learned. And I'm, it gives me more control, which I like, because I love everything about trading. However, it's like growing exponentially in the trading industry. And so I know people that do, and I imagine there will be a time, not forever away, that I work with that at some point. But at this point, it's all me. I'm not ready to change yet. I think I'm still growing and know how to take a good trade. And I want to keep the focus on feeling the trades myself, being the one to click buy and sell, and what the experience is. And if I cut it too soon because I'm nervous, like how I should have held to it. And so I think I don't yet, and I'm not ready yet, I think, to take the plunge. But I'm curious, what about you?
There are some automated trading systems that works, but for me, I use my own hand to enter the trade. Yeah, I would say later on. So when you're, I would say when you earn that much money that you can have your own account with an expert advisor or an algorithm or something like that, then it's okay. But for now, I I only use my own strategy, and I think that's fine. So there are some good softwares. So I don't want to say that there aren't some good softwares, but for me, I would say first of all, I want to learn it myself, and then I can earn the money to put it in this software. And I think that's a huge thing.
I agree. I think it's coming, it's growing by leaps and bounds, and there's probably like significant knowledge and experience and great systems out there. But I definitely don't want to yet like let my money work for me. I am a trader, but I could see it potentially. How I envision potentially getting into it is allowing it an account to do some swing trades based on automation and start there. But not yet.
Yeah. And I would say in the end, I don't want to trade until I'm 60. So there will be some day in the future that I don't want to trade for myself and let a system run my portfolio. So it's like for me, I use technical analysis on my long-term stock portfolio as well. And so it's like when you have your software in swing trading, as you said, and yeah, and then not diversity, when you use the different things to
Yeah, like diversify the different holdings, like
Yeah,
bonds
yeah,
and
yeah,
stocks
yeah.
and stuff. Yeah.
Diverse your portfolio with
Yeah.
it, because for me it's like, okay, I know things about stocks, about technical analysis, but there are people that know about everything else, and
Yeah.
you can't absorb every information that they have. So you can't be an expert in everything. So you need to give your money away for something, but I'm not ready to do this right now. And I'm not a multimillionaire, so that I can say, okay, 100,000, that's no problem for me. But yeah, I'm trying to be a multimillionaire in the future days.
Same.
Yeah.
Yeah.
So I think everyone that starts trading want to earn money with it.
Yeah.
It's not only for fun. Yeah, it is funny for me, but in the end, I want to earn money.
Yeah.
That's it.
Agreed.
How would you assess the long-term reliability of your strategy? So, in different market conditions, do you say that you optimize your strategy or change it, or what do you do in different markets?
Yeah, I would definitely say that I have never stopped optimizing. And I love when market changes because it sometimes will throw me off. This spring there was a period where it got real special when Trump took office, and then all kind of things were happening. And every random announcement was causing chaos. I think that was a period of transformational growth for me because it's like, okay, just breathe. Like, I know that it's batshit sometimes, but like, you have a system that you have studied. And so I leverage down for a period when there's a change in market condition. And then I just am more cautious. I want to even be more careful and more selective on what trades I get in. But I absolutely want to trade market conditions through all of the market changing conditions over the years, because I think that really is making me and anyone who trades through these times a more strong trader, because it just shows you, if the market shifts a little bit, she starts changing her moves, the core strategies of, an engulfing candle and what that signifies, what kind of money is behind it, and how you could get in with that. I think that will hold through different market contexts, but you do have to recognize when it shifts and to be careful with that. And so I definitely think that my strategy is only improving every time that the market has shifted, because it makes me, think about how I want to adjust it and then continue to make it better. So I actually am totally into it. I am comfortable with change. I worked as an ER nurse for a long time, so I could take a whole lot of things coming straight at me and kind of pivot as needed. And I think that flexibility is required to make you stronger. And so I definitely think the core elements of my trading system are repeatable enough that they have flexed and only improved. So I'm going to keep
Yeah.
that going as long as I can, but I do believe in it.
Yeah. So I optimized my strategy as well with Trump. So Biden was a lot cleaner in the market.
Smooth.
I don't know if futures are that's happening as well, but in
It was calm.
Forex, yeah, it was calmer, more precise for me personally. So the setups were cleaner with Trump there. I don't want to say not clean, but cleaner with Biden. So there's a cleaner trend, there's a cleaner retracement, and with Trump, it's more like everyone is waiting on Truth Social if he's doing something right there, and oh no, what what did he tweet? So it's like, okay, yeah, 50% on exports from Putin and his boys, and within 50 days when Ukraine was not ending, and you sitting like there and okay, no
Yeah.
press conference, it's Truth Social, it's not an official medium, something like that. So and then you treat it before CNN or something like that is it gets information. So it's
It's
like,
insane how the
yeah,
the global world has changed since Trump has taken office in the US. I mean, the traditional news outlets carry way less weight because information is just exchanged so fast. And this administration is one that has really kind of been very different in terms of utilizing that in a way that we've never seen before. And so that has been a major change. Forex used to be the gold standard for recognizing when potential volatility would happen. And that's, I would say, not anymore. Like that, if anything, the red folder news were like, well, shit, it's Trump went on a date last week and it had a larger reaction than this information in Forex calendar. So it's definitely changing times that we there's been some growth through.
Yeah, it's really good when you have your strategy getting to sometimes like that, and it's profitable as well. So I would say it's a more harder time now to trade. I have some friends that I teach some things about technical analysis, and then it's like, okay, we have Biden chart, and then we have Trump chart. So it's not that clean. And then one of my really good friends, we started 1.5 year or 1 year ago, and it was pure in Biden and really clean. And he's like, yeah, that setup, that setup. And then I said to him, okay, let's wait for Trump. And he's like, oh, what would change? And and now he's like, yeah,
Yeah,
okay,
everything.
yeah, everything is gonna change. And so it's like before in gold you have had a stop loss from 20 to 30 or 40, something like that, and now 100 and 120 because it's so volatile now.
You get wicked out easily.
Yeah, and so it's like, okay, what's happening? So
Yeah.
yeah, and in the end, what would you recommend for beginners to start technical analysis?
I think let it take time is my best piece of advice of like try and seek the most knowledgeable, reliable, honest mentor that you can and then stick with them and pull as much information as you can and then trade. Trade for demo for a short period, but then trade with real money on the line, even smaller contract sizes. But you have to have skin in the game to really feel how the market moves. And then I don't think that you can be profitable without experience. So, just decide that you want to do it and then you learn from the best person that you can find and then trade and feel it out and study and be curious and draw all over your charts, different levels and what you think might happen. And then if that's proven correct, what did that teach you? And if it was proven incorrect on this day, what did that teach you? And make notes about all of it and just kind of don't hate on yourself, especially in the first year for losses, because that's normal. Like you have to think that it's normal to pay market tuition in the way of losses in order to gain that experience, because that, in my opinion, is the way to become a truly consistent, profitable trader is by having skin in the game and feeling out trades and then learning how to fine tune them over time, how to optimize your system. And so I think the biggest thing would be to be a little bit kinder to yourself and recognize that there is a period of time that's different for different people, but you have to be able to embrace it and let it happen and change over time and with experience. And then it will actually be cemented in your brain more because you won't just be like, oh, that loss sucked. I don't want anyone to know that I lost that much money. I'm going to forget it ever happened. What a fucking waste, because you could have written down all the ways that loss and why it did and what you want to do differently. And if it sets up again, what you might think instead of what you thought today, and let it become a catalyst for growth instead of like shame or fear. And I think that that's been, the biggest thing that I learned in experience that no one really told me in the beginning was that you're going to suck for a minute and let the lessons teach you instead of scare you.
Yeah.
What would
So
you
I
say?
think I would say that every trader is not at the point he wants to get. So there's every trader is improving every day and getting cleaner entries, cleaner TPs, cleaner stop loss, something like that. Everyone is improving every day. So when you have a bad day or a stop loss hit or something like that, or you say, okay, I want to earn 500 euros a month, and you are not at that point right now, don't be ashamed of it, because when you stick to your plan and do everything to get to that 500 extra money, then you will get there in the end. So yeah, find a good mentor, get his strategy, and do your thing. Do your own research. Don't do everything because you need to stick to the chart and be happy with it, with your strategy, with the strategy of your mentor, and then do your own thing in the end. For me personally, I stick 3 or 4 courses in one strategy and then point out, okay, that's gonna work, that's not gonna work. But in the end, put 100 bucks in your account and try it by yourself. Money that you are not afraid to lose.
Yeah,
Yeah,
that's great.
that's
Very
it.
good.
So thank you for the interview, for the opportunity to be a part of Market Mamas.
Yeah, thank you for coming on. I really appreciate this conversation, and it's really enjoyable to hear everyone's take on the market, because everyone is just slightly different. But the people who are really locking into a profitable system, I would say there's definitely some core elements that are very, very similar throughout. So I'm really grateful to be able to bring these conversations about that might help people cement into what's working well for them and where they're headed to. So thank you for your time.
Yeah. And in the end, when my master thesis is finished, I will send it to you and translate it in English and then send it to you, and then you can use it for your own research or for everyone that want to see it. So that's my offer in the end. So it would be 40 to 50 pages of technical nostology.
Well, this episode's going to come out in early August. And so when you're done, we can actually put it in the show notes. And so it might, this episode will come out and the thesis is later, but we'll link it for our viewers. If you come back later in the fall of 2025, you should be able to find it in the show notes for this episode so we can all learn together, which I think is so powerful and in trading and in life. So cheers to
Yeah,
that.
that sounds great. Then have a great day and see
Yeah.
you.
Yeah. Take care, everyone. Happy trading.
Yeah, you too.